Hello, traders. I want to go over a couple of situations that you're going to encounter when you're trading where it's difficult conditions and you're better off just staying out of the market and going with a day that is more conducive to making money because that's why we're here is to make money. The first one I want to look at is called a seek and destroy. Is That's what my mentor calls it. So here's a nice normal day, the 24th. This 5 minute chart. We come down, we find a low finally. Don't know why it picked that one, but it did. This is regular trading hours only showing, so there could have been an overnight low that it was taking out. And then we go back up. That's a normal day. You can catch a move on either the downside or the upside. I prefer to wait for the reversal, so I'll be waiting for this and then catch that to take out the high of the day. Um, this is a normal day. Nice normal day. Money can be made here. This is the day that would be called a seek and destroy day. Now, eventually, we don't even take out that high. We go up and we just even it out. That's not normal. Normally, the market will go to a low, previous session low, or a previous day low. Maybe it was working off of this low or that low. It'll go down there and take out that low, and then it will reverse and take out the high of the day. That's a normal day. That happens 70% of the time. On a day like today, this is the seek and destroy type of day, you would make a fair value gap. Like here, we make a fair value gap and we respect it with these candle bodies. On a seek and destroy day, we may make a fair value gap. On a 5 minute chart, there isn't a single fair value gap until right here. And we respect it, and then we violate it. That's very characteristic of a seek and destroy day. We go up and then we just come straight back down, up and straight back down. If you look at it on 1 minute chart, it can be even more frustrating. I'm still on the 23rd here. No, I'm not. Okay. That's the 25th. 24th. All right, here's the 23rd. Now, where's our candles? There we go. Yeah. So it can be even more frustrating on a day like today. This is the seek and destroy. And the way you can recognize it early on is we put up fair value gaps and they look like they're going to be respected, but then they get violated. And this one, okay, yeah, we can come back to it, and then it gets violated. Another way is it's taking out short-term lows, but it's leaving these intact. Why aren't we taking that out? On a normal day, we're going to take out this stuff. We come down, we take out that one, but we leave these alone. We took out this high, but then the other ones, they don't take out that high. Even this one, it comes up, it doesn't take out the high. That's an abnormal day. We come back down, we don't take out this low, we take out this low, and we go up and we finally take out that high. So you think, oh, we're going up now. We got us a fair value gap. We got us another one. We're going up now. And no, we're not. Comes down and violates all of those fair value gaps, and there's just no direction to it. Does it take out the lows? No, it doesn't. So now we go back up and we take out that high just briefly. And then finally we start coming down to take out some lows, but we make a relative equal low. That is abnormal market movement. And that is called the seek and destroy. All they're doing is just chopping up retail guys. They're taking their stops. If they're going short here, if they go short here, then they're going to go up here and take out their stop. If they've gone long here, then they'll come down and take out their stop. Maybe they waited and went long here, put their stop there, comes down, takes it out. And it's just a very difficult environment to trade in. I personally avoided that day with like the plague. Even later in the day when you can normally catch something, it's still just leaving the lows, leaving the highs. Didn't even take that high out. How can you say, okay, this is a good trade? The only time you could actually get in on a trade is when it took out these lows for the day, right there. Took it out. So you could possibly get in on a trade and maybe target these highs because you know it's not going all the way to the highest high. But you could get a little bit of money out of it right there if you were lucky. But those days are mostly stay away days. And they're hard to recognize at first, but if you will give the market at least the first 30 minutes to show its hand, it will show you in the first 30 minutes that it's being manipulated and not behaving properly. Lows aren't getting taken out. Highs are forming but not really getting taken out. That's your indication that we're in a seek and destroy mode. Somebody's in there stirring the pot. The algorithm is not running on its normal pattern. So give it that first 30 minutes and just to understand what kind of day type you're dealing with. The second one is a high resistance liquidity run. Okay. So this would be an example of a high resistance liquidity run right here. So we go the first 30 minutes of the day, and then we go down, but we're just chopping. It's hard. It's difficult to hold a position when it's going, oh, I've got $100, now I've got $50 or whatever it is, $1,000. Doesn't matter the dollar amount. When you get in on a trade, maybe you're getting in somewhere around here to watch your money grow and then evaporate and grow and evaporate is stressful. This run right here would be considered a lower resistance liquidity run. It went there pretty quickly. And when we reversed, did an original consolidation, and we went up pretty nicely to these relative equal highs, which could be your target there. Had a little bit of chop along the way, but that's a nice trade. Much more palatable than being in this mess. There is a little bit of stressy stuff right there, but by and large, that's let's see, from 11:17, your take profit would have gotten hit at 12:49. That's an hour-long trade. You could just get in here and take that out right there if you wanted to. It doesn't really matter. But the fact of the matter is it moves a lot faster and spends a lot less time in consolidation. This would be the ideal situation, but after all this chop, how are you going to get in it with any confidence? Is it going to take out that high? Maybe that's where you put your entry. How do you get in it? If you're bearish, I would say, you could, if you have a level down here you think the market is aiming to for whatever reason, then you could try to take a trade at the top of this little consolidation for a push down, but you'd have to have an aim point as to why it's going there. And that would be an example of a high resistance liquidity run. A lot of times the candles will go just up and down. It'll be moving in one direction. Let me see if I can find another example. It'll be moving in one direction, like right here, we're moving down. But are we moving down in a orderly fashion? That's definitely the price went from here all the way down to here. All the way down to here. But we're not moving down in an orderly fashion. High resistance. Here's a low. Here's another low. We're running for that liquidity, and we got it. But man, was that a journey getting there. Okay. And then the other one where things go a little awry and it's a little bit more difficult to hang your hat on is when the markets are not running all in the same direction. And we actually had one of those yesterday. I'll show you just to look at that. And you can just click. I'm gonna put a 15-minute chart up. Okay, and we'll just focus on what happened yesterday. So I'll spread it out to where we can just see yesterday. There we go. So here's NASDAQ's movement yesterday on a 15-minute right there. Kind of not a great day to trade. If you caught this move, it was a decent one. We took out the high and then came and took out the low. But we didn't ever take the high back out. So if you got in on this one, that was a pretty decent one. This one was the best one of the day, in my opinion. Was when we made that low, it put up a really nice reversal signal and then went up, took out the high of the day. That required a lot of patience because you're sitting there from 8:30 in the morning till 2 o'clock in the freaking afternoon waiting for that reversal. But the fact of the matter is, that's not what I'm even showing you. I'm off task. Look at how the market traded for NASDAQ yesterday, especially right here in this section right here before noon. It's almost flat. ES, little different situation. It kind of trickled up and up and up. It didn't have all that up and down. It just kind of went up and up and up and up and up. And then finally here. And let's look at the Dow. Those are the three main indexes you need to look at. It opened and fell out of bed and went and took out the highs and then trickled all the way down. So these indexes, if you were looking at them on a line chart, they're not following. Normally on a normal day, they all go the same direction. But if you will notice about right here, it looks like it says 2 p.m. New York. Yeah, 2 p.m. New York. They kind of got in lockstep with one another, which is what you want to see. And from that point on, this was a tradable day. When it's here, it's very difficult to know what it's going to do because they play off of one another. And so if they're doing something, all of the markets are doing something different, it's not a good trading situation. But look at this. 2 p.m., fell out of bed, went back up. 2 p.m., fell out of bed, went back up. YM, fell out of bed, went back up. Prior to that, it was anybody's guess where the markets were going. You could trade one individually, but looking at all the markets and making sure they're running in unison, that's a good indicator that you're going to have a decent tradable day. But when they're not running the same direction, it's called a decoupled market. It's best to wait until they do start running coupled up again. Okay, so those are the three difficult days: seek and destroy, a decoupled market, and a high resistance liquidity run. Isn't that joyful? Goodness gracious. I was going to show you those examples of those. This would be a low resistance liquidity run. Big money to be had, not stressful at all. Very, very nice day to trade. This, seek and destroy, basically traded flat. This, high resistance, liquidity run. So we generated liquidity, went out, took out the top, and we got there. But man, look how long it took and how much resistance we met along the way. So those are it. Those are the 3-day types and how to recognize them. Um, it just takes practice. They'll usually start out, this is a 5-minute chart. So from the open all the way until for an hour, we just stayed in that tight little range. That's a good way to recognize them. We did a little pop, took out the highs. I would be looking for a trade to reverse back down to the lows, and I wouldn't get it for a very long time. Finally takes out the low at 2:30 p.m. from the high at 11:10 a.m. I'm in this trade for 3 freaking hours. I don't think so. That's a high resistance liquidity run right there. Starts out with usually a bunch of crap consolidation, and then it'll give you a little bit of an opportunity. There is money to be made on those days. Look at this seek and destroy. Just never went anywhere. Didn't want to take out the highs. Made that low. Didn't want to take it out. Come down close. Didn't take it out. These days are just leave them alone kind of days, and they occur once a week. You'll have that type. At least once a week you'll have that day type. So you got to be watching for them. Decoupled markets, high resistance liquidity runs, and seek and destroy days like this. You don't want to be any part of that. It will just chop you. Staying on a larger time frame, 1 minute is what I go to when I'm looking for reversal patterns. Like once it gets up here, I would change to a 1 minute chart because we took out the high right there. I would change. But prior to that, being in a bigger time frame, like at least 5 minutes or 15 minutes, and waiting for one of those highs or lows to be swept is your best practice. Once they get swept, you can change to the 1 minute and look for a reversal pattern. I hope that helps. And I sure do appreciate y'all watching these videos. I hope you're learning something along the way. Trade the extremes. Don't fiddle in the middle. Be kind to yourself and be kind to one another. I love each and every one of y'all. Hope you have a good day.